Hello, traders. Gary Wagner here. Approximately 9:30 a.m. in Honolulu, Hawaii. It is Tuesday, the 13th day of September, and this is the daily report for gold. We currently have gold trading at 1836 and change, 1836.20, as you can see, current bid, putting it up about $22 on the day. On today's report, we'll talk about the buy trigger that we received yesterday, reason for it. We will also talk about my expectations for where I'm looking for this market to go, all on today's daily report. First chart that I'd like to look at today is a 320-minute chart. It is a straight candlestick chart, and in this candlestick chart, I have entered one Fibonacci retracement. Let me show you where it comes from. We're taking it from the recent top to the bottom of this dip so that we can chart different areas. And of noted interest this morning is the 38% level at 1841, because I think that you can see that in terms of interim or short-term resistance, we had a high this morning, in fact, just about a half hour ago, of about 41. And you can see how that falls right within that resistance area and seems to have given us a little bit of a kickback or a pushback on the downside this morning. Still trading up aggressively higher, $22. And what we're hearing is that as this market came down, and as we talked about yesterday, when it hit this low of $1,800, my belief was, and we were correct in this assumption, that this would be a price target that would attract buyers into the market and bring that market back up. In fact, you can see how that market went up from that point. And of note to me was this one set of low ticks right around 93, 93 being the absolute low of this particular dip. And as you can see, it matches in terms of a double low right to here. Traders, we are looking at a 240-minute chart with a revised or updated possible what we call a pennant, wedge, or triangle correction. As you know, yesterday on our show, we were looking at a particular triangle correction on Friday as well as yesterday, in which I was using this particular line here. I was drawing this line from a couple of critical points, bottom points, meaning this low and this low. And then what happened, though, is when this marketplace itself came up and then tested and broke this line and created a new low, we could on one hand say that it went out of bounds or went out of that particular channel line, that triangle line that we were drawing. Well, upon analyzing the market, my belief is that typically it is the analyst who will be wrong rather than the actual market move itself, meaning where the trend lines have to go. And so I have adjusted it. What I have done is, in order to make better sense of this, I can adjust it, but it has to be realistic targets, and we can't just add a new low to make it make sense. However, when we go ahead and fix it from the beginning of January and draw our line to this low here and carry that forward, you'll see that we are now back within the bounds. And so the error was on the part of me, the analyst or technician, in where I drew this triangle formation and not the triangle formation itself. And that is always important. In other words, when we were looking at this yesterday, my belief was that we had some sort of an aberration here. I am now under the assumption that what we are looking at is the proper place to put this low support channel or trend line. Traders, as you know, I have been under the assumption that we have one of two possibilities in terms of what type of correction we're going to be witnessing here. I have been kind of bending towards, or leaning towards, I should say, the idea that we have a triangle correction, and that is because the fundamentals are so bullish in the marketplace that I find it hard intellectually to see how the market could sell off drastically unless some of these fundamentals that are driving the market have a substantial change, which I haven't seen. When we look at this chart, is it still possible that we will have some sort of a ABC correction? The answer is yes. However, the probability that we will continues to go lower and lower. And as we look at this from another vantage point and we see these series of lows and these lows are getting higher, and at the same time when we look at these series of highs, and as you can see as of recent, these highs are getting lower, you're getting a marketplace which is without any shadow of a doubt beginning to compress in range. And it is that compression in range that we look for in a triangle correction. So traders, obviously, we took a position yesterday and we got long in this market. We got long at roughly 18.16. And what it was that enabled me to issue that signal at that point, let me go ahead and change this to a different time frequency. And traders, all I've done is taken this down to a 60-minute candlestick chart. The first thing that you can see is as this market came down off of these highs, this is the 1885, 1890 area, and it comes down, we got a classic formation, and that's the Three River Morning Star. Now, it's only on a very, very short-term chart, and that short-term chart itself is a 60-minute. And then we began to get confirmation, but as you can see, that confirmation was rather light, scattered at best. So I didn't really take the call at this point. I wanted to have a nice solid confirmation. When we had this candle here completed, as you can see, if I draw this over, we're just right around 1816. So it was actually during this candle, after the formation of that Three River Morning Star, that I actually made a decision to go in, enter the market, and enter it from the long side. Well, we saw this market move up quite nicely. In fact, hit a high of around 1830, only to form on a short-term basis this Three River Evening Star with a doji in the center. We had this exaggerated low. Somebody was taking off a large order, I would assume. And then from there, the market really began to move higher. And really, until it hit this resistance at 1841, was pretty much moving to the upside. My expectations at this point is that it will, without a doubt, I believe that it's going to go up, barring any new fundamental news which is going to change that. But I believe at this point that this particular area of 1830, this is the area that used to be resistance right in here. My belief is that it is now support. Maintain your long position at 1816. Maintain your stop. We'll look to move that later. Also, traders, we have released our trade application for Android, and we are currently working on that, improving and adding features to that as we begin our iPhone, iPad application. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.